So it's been a couple days since my last broadcast where I was hilariously attacked by so many people for betting that the market would continue to go lower when so many felt that the bottom was still in. Well, look who's right in the end. Come to find out, the market is selling off as I speak. But here's the thing. They're going to bounce again on us, okay? So it's going to sell off, and then you're going to get another green day, and that's going to be a green day to sell too, because you got people who are completely in denial about where we are as a market. Ladies and gentlemen, we're going to become the next Rwanda. We're going to become the next Zimbabwe, all right? The $10,000 note is right around the corner, but so many of us are just completely in denial about America's economic system and at the fact that it's falling apart. I mean, again, we have the largest basically bailout in U.S. history, bigger than all the other bailouts put together. And guess what? It's going to happen again, even with more frequency. Can you imagine what's going to happen when we get into a real recession? We're already in a recession now. Let me just go ahead and announce that now. We're already in a recession. But imagine what happens when we actually get into the global recession, which is going to happen within the next 36 months, 48 months, because remember, the baby boomers are going to retire, folks. And by the way, they're going to retire basically penniless. Many of them aren't going to be able to retire because they're losing their life savings as we speak right now. And many of them are not going to be able to leave their jobs. They're literally going to be pushed out of their jobs. You're going to see people so old that they have to be literally tossed out of their office, right? Because they can't take care of themselves. And they can't, produce on the job. But the fact that they don't have any money to just go to Florida or go to Arizona or go to LA like they've been doing for decades now, you've got a generation now of older people who will be helpless. All right? For those of them who are lucky enough to still, maybe they invested early or had a large inheritance and they're going to be coming out of the exchanges, that will cause massive amount of deflation that, by the way, is already being caused extra time by technology, right? Technology is already naturally deflationary. That's why, all the products you use for the most part, Amazon, Google, all these companies that you use on a daily basis are all about making your life simple, easy, more efficient, and that causes prices to come down. And of course, our economic system is an inflationary system, right? We benefit from inflation. And in America, people believe that if you buy a home, you should sell that home 10 years later, 20 years later with a significant profit. Well, what happens when that doesn't work? Right? What happens when you bought a home 2 years ago and now 10 years in, 20 years in, you're not up significantly, right? Because the market has crashed and because deflation basically has lowered the price of homes to a point where now, owning a home makes no sense at all, right? Owning a home makes no sense at all. And I'm going to tell you right now, in the next couple years, that will really be a bygone era where you see people who buy homes with the strict intense purpose of, hey, I'm going to sell this home 20 years from now with more money in my pocket, right? It'll be more valuable than when. No, that's not going to happen. Why? Because 3D printing will get so efficient. 3D printing will become such a reality on a large scale that the idea of, oh my God, this large piece of land or this small piece of land we can build on, the cost of building is X and Y, and because of that, now this is more valuable piece. No. 3D printing will, change the world of construction like nothing before it. You're going to see properties come up for a tenth of the cost that they actually are worth in terms of replacement value today. Right? Because you're just not going to need that many guys to put together a property, right? To build a commercial property or residential, or particularly residential properties, right? Because residential properties are significantly more simple to build than commercial properties. So, ladies and gentlemen, the world that we're going into is naturally deflationary, right? Semiconductors are not going to be any less in quantity over the next 36 months or more in the market. We're going to see way more semiconductors out there. 5G is here and it's not going away. No one gives a fuck about the health concerns. Again, it's all about the greenback. It's all about money. Nobody cares about the fact that it's causing cancer, possibly causing what we're going through right now. Nobody cares, okay? You can yell it from the bar. You can post it a million times on Facebook or Twitter. Nobody fucking cares. So what is the Fed to do about that kind of environment? Well, what else do? You just print money, right? I mean, hey, everybody gets $1,200, right? And let's be honest here. This $1,200, this is the beginning of universal basic income, all right? This is the beginning of everybody going to be able to get some money from the federal government, all right? If you make minimum wage in this country, this is the best time. This has got to be the best time in your life, because you're going to be making more money over the next year and a half than you made probably in the last 3 years, because the government is going to need to put money in your hand like never before in order to stimulate this economy. We're already in a recession. The only way to get it moving is to put money in the people's hands. So if you're on minimum wage, right, you're making $7.25 or $7.50, whatever it is, God bless you. God bless you. You probably work a really shitty job that you really hate, and it's about time that people show you some love. Because guess what? This economy right now, which is on its knees as we speak, is running on your labor. Yes. For all intents purposes, this economy that's being held up by nothing is now depending on the very people that so many of us have tried to demonize, that they don't deserve $15 an hour. And look at us now. Look at us now. Now we are dependent on the $15 per hour or less worker to deliver us food, to put food on the shelf, to cook our food, to do much. It's the 100K a year worker is not who we're relying on right now. Okay, they're not at Walmart stocking shelves. They're not driving the trucks to get us. I know they're 100K truck drivers, but for the most part, not every truck driver makes 100K. Right? For the most part, the people who are taking those pallets off the trucks aren't making anywhere near 100K. Let's just be honest about that. So, Sal, what do we look at in terms of future? How do I make some money on this? Well, do what I've always been suggesting, which is you should be selling calls on here. You should be selling calls on here. Now, the market's tanking today. It's going to bounce again, right? It's going to do another 1% or another 2% move, because that's what we do. We're in a high volatility environment. So you're going to have huge swings up and down. But for the most part, the trajectory is down. I mean, whatever day is green, that's an opportunity that you need to be, looking at some of those call options and saying, how far away from the price action can I get in order to sell, a particular call here for some profit. So that's why I'm suggesting guys go out at least 15 days now, all right? Because of 15, don't go out to the 60, 45. Those are particularly for environments that are low volatility. Because we're in a high volatility environment, you want to go out, 15 days, 17. I know some guys who are going in as close as 7. That's a little bit too much. In terms of volatility, you want to go at least 15 days and sell some of those, right? I mean, sell, 2,800, 2,700, 2,650, right? When you get a really good entry point on the hourly time frame, right? If you are selling options, or if you're just buying puts, you want to be buying puts at least somewhere above the 40 RSI. You really don't want to be selling puts, buying puts at, below 40 RSI, because you're basically asking for it. So, things could go against you if you are buying puts below 40 RSI. Now, that may work in your favor if you are if you believe that things are going to continue to go lower immediately, or in a very short time period. So the price, the trade could go against you for a day, even 2 days. But if you understand that the trend is down, what does it matter? What does it matter? Just go ahead and get the trade now and lock that profit in. And yes, it may go against you for 1 day, 2 days, but the overall trajectory is lower, and you should end up with a significant profit as the market continues to correct itself. And we had, what's called a dead cat bounce. But again, you had some people who really believed that the bottom was in. How could you believe the bottom was in? After the president of the United States came out and said that we're going to, continue the policy of social distancing for another 30 days, that should have told you that we're going a lot lower, right? So, because for the first 30 days, right, for the first 45 days, what guys were going on was, okay, book value, right? I mean, hey, these companies aren't making any money, but look what's on their balance sheet. Look what's worth it. Let's take, for example, an airline company, right? You got 1,000 planes. Each plane is worth $5 million, right? Now, you've got a book value now of $5 billion, right? 5 million times 1,000. Well, if this is an airline, company, hypothetically, and each plane can't go to certain parts of the world, now each plane isn't worth $5 million, right? So this airline now, is it worth, $2.5 billion? Is it worth $3 billion? Is it worth $1 billion? The market has to identify that, right? So that is why the market continues to remain open as, buyers and sellers come together to find real value. And real value, unfortunately, is a lot lower because this government is printing and printing and printing and printing money, right? And look, will there be an end to this? Yes, there will be an end to this. But the hilarious part is where you have individuals out here who think that when this is all said and done, that we'll just go right back to higher highs. And it's just not going to work that way. You're going to have a lot of people who were going to come out of this and say, you know what, I don't want to go back to the office. I actually like working from home. You're going to have a lot of employers who say, you know what, we actually like what is happening in terms of our work at home workforce. I think we want to create a work at home workforce. That's more deflation. that's more, prices coming down, value coming down, as these offices that are now practically empty will remain empty, right? There are going to be some office buildings that are out there right now that were full 6 months ago, 3 months ago, a month ago, that now will never see any more clients refill those leases. I mean, you have so many businesses that are going to get out of their lease, who are never going to pay back on their lease, or just going ahead and cancel their lease entirely, right? We just had an article come out where they said nearly 40%, you can Google this, 40% of New Yorkers are not going to be paying their rent. 40%. I mean, 4 out of 10 people in New York are not going to pay their rent next month. And by the way, they can't be evicted, right? And they're probably not going to be evicted for the next 90 days. So, if you wanted to live in New York City, and you've got cash, I don't know of a better time right now to call a landlord in New York, but to say, hey, you had a guy in there, who's paying, $2,300. Hey, I'll pay you 18. I'll pay you 18 and I got cash. I'll pay you 3 months up front. How do you like that? I mean, they'll work with you. They'll work with you. And that's why I'm suggesting, guys, on my Instagram, if you got somebody you owe some money to, pull up your credit report like I did today, give them a call and say, hey, look, I know I've owed you money. I haven't paid you. It's showing up on my credit report. I don't have a lot of cash, but, here's 70%. I offer 70% off, by the way, of what I owe you. So 30%. It's 30% of what I owe you. And make the offer. And what I found is that they're desperate as hell. I mean, they are desperate as hell for cash. You should be calling everybody you know right now that's showing up on your bank, on your credit report, and offering them an opportunity, to cut what you owe in half by at least 50%. You should start off at 70. I mean, the conversation should start at 70%. So 30% of what you actually owe, right? And because you got to understand the leverage, you have all the leverage right now. If you have cash, you have all the leverage right now. You have all the leverage in the economy right now. Now, understand that won't last for a long time because, eventually people are going to realize how worthless the dollar is. But, for now, you have the leverage, right? You have all the leverage. The companies are struggling. They're trying to figure out how to, hold on to what little that they have. So companies are so desperate to get cash in the door, right? Because many of these companies, they're taking out huge lines of credit with banks right now. I mean, $260 billion in loans has been written over the last 2 weeks. That's a record. That's a record loan taking right now. And by the way, many of these companies will not be able to pay these loans back. And that's the problem. Many of these loans will not be able to be paid back. We're going to come out of this situation with more debt, in a more perilous position than we were going in. That's why I'm telling you right now, we're not even prepared for a real recession coming out of this. We're not prepared for it. All right. So you're saying, Sal, how do you prepare yourself? Well, one, if you don't have gold or you don't have silver, you should be getting yourself some, preferably in physical form. But if you can't afford it in physical form, you should be getting yourself some contracts, or get yourself some access to GLD. Forget the fact that in the short term, it's not trading properly, right? You're not seeing the prices you probably should. Forget about that. Don't worry about the short term. Understand that the adjustment will be made in pricing as time comes, right? Because if you look at gold right now and you just look at where it was 6 months ago, you can already tell the adjustment is happening, right? So you're not going to wake up and gold is going to be up 2,000 points. That's not going to happen. The adjustment will be gradual, where people are going to realize that we are going and slowly entering a massive global debt crisis. And that's going to be a gradual one where people just realize it. I mean, look at what's happening right now to Europe. I mean, Europe is just being decimated, right? I mean, the country, these countries that, again, they were literally importing immigrants from Syria and all that because they knew they were old. They knew they were old populations. Thankfully, they've been doing that. Can you imagine if the Europeans didn't take in, nearly 10 million immigrants, what would be happening to their economies right now? I mean, they'd be completely decimated. That's why a lot of these people who are anti-immigration and, a lot of these hardcore white supremacists, they didn't understand what the leaders in Europe saw, with the fact that they're full of these old populations. Basically what's happening in Italy right now. You've got this ancient population where like the average person is like 77 or some shit. And they're being decimated. They're being completely decimated right now. And guess who's going to replace that? It's going to be immigrants. They're gonna go to North Africa. They're gonna go to Morocco. They're gonna go to, Egypt. They're gonna bring in these people, and that's how they're going to try to restart their economy. There's no choice. They have no choice, all right? And again, I'm sorry I'm bouncing around here, but I want to get across to you is how dire the situation is right now, because people really don't understand how dire our situation is, how perilous of a situation this is. All right. People are blind. They don't understand. They just think that, everything. We are in a serious downward spiral in this country. You can see it on the faces of nurses that are, posting damn near every day about how they don't have enough equipment, how they can't get this and can't get that. We have fleeced America off. We have fleeced America off. We no longer manufacture our own medicine. Even the test kits for this horrible virus, they're being made in China. All right. In the 1970s, all right, let me take you back a little bit. In the 1970s, the Republican, sentiment, that conservative sentiment going into the 70s and 80s, basically sold out America's manufacturing system to, foreign buyers, right, to Wall Street. And they said, Wall Street came to the Republicans and said, hey, look, if you just go ahead and believe in globalization, if you just sell out the American middle class, you push this to these third world countries, right, where we can do it for cheap, we can do it for less, you'll make billions of dollars, right? You'll make millions. You'll create this incredibly wealthy class that will keep you in power. And you can sell the idea of pull your bootstraps, tie your own shoes kind of ideology to keep people, to basically, vote against their own interests. And it's worked, right? I mean, it's worked for almost 30 years now. And now it's coming back to bite them in the ass. Because when it comes time to now, getting the supplies necessary, we've had to turn around and convert companies that, build cars into companies that build ventilators. All of this should already be happening in America, right? We should already be having companies in America that build ventilators. We should already be having companies in America that build and manufacture PPE. That's just common sense. That should be already happening here. That shouldn't be something that we should now be in the process of building up. But again, when you live in a country that puts Wall Street before the interest of the general public, this is what happens, right? You live in a country that it's about creating opportunities for immeasurable wealth creation, and that means fleecing the public. That means putting real, tangible jobs in the hands of people in third world countries and giving everybody else who should really be doing those jobs, right? Because Americans are far more efficient. Americans are far more intelligent, harder working. But because we quote unquote cost more, they gave those real good companies, real good opportunities to China. All right, all those things that are going to China should be coming back to America right now. Right now. I mean, everything in terms of building medicine, building ventilators. I mean, and again, I don't want to double speak here, but we should be coming out of this thing. If we want to save America, we should be coming out of this thing, building massive manufacturing plants back in America to do these little things again. That's what we should be doing. That's what we should be doing. If the government wants to create inflation, bring manufacturing back to America. I mean, it'd be automatic. It'd be automatic. We shouldn't be creating inflation by printing money. That's not what we should be doing. We should be creating inflation by the fact that, our workforce is getting more intelligent, more skilled. That's how you create inflation naturally, not by printing money. Printing money, you create a bubble. You create a false sense of security. And that is why we were able to come off the highs, 3,400, 3,300 on the S&P 500 so quickly, because it was a scam. It wasn't real growth, right? It wasn't real tangible wealth. Look what's happening to the LA real estate market in the last 3.5 weeks. I mean, they've been completely decimated. Go to Houston, go to, all these places that were having, just immense amount of artificial real estate wealth. It's been absolutely decimated. And it looks even worse going 12 months out. This is going to get worse, people. It's going to get a lot worse. And we should have saw the top when you had these tiny home companies coming out here, these little tiny home companies out here, or these companies, probably a better example would be these companies that were starting in Boston, where they were basically buying homes and then selling them room for rent. That's not sustainable. Okay, the room for rent lifestyle as a business is not sustainable in America, because you have recessions, you have depressions, and eventually individuals who can not afford a home will eventually be able to afford a home because prices will collapse, right? And that was pretty much the top. When you see companies like that coming out of nowhere, that's your top. That's your alert signal that really the economies of scale have gone off the floor. I mean, they're off the wall, and things need to be adjusted, and we got adjusted. And that's why, I don't want to get religious, but I got to get religious for just a second here. I got to thank God for this coronavirus. This has been a blessing. It's been a huge blessing for me, for so many people out here, because we're well positioned. All right. We use our moving averages. They buy my trading course. We were on top of it. We were on top of it. I've been saying this has been coming now for 2.5 years. This has been an incredible blessing to me, my family, to all of us who basically if you're under the age of 60 and you have less than $1 million of net worth, this has been a blessing. All right. This is a blessing. I know it may not look like it right now, but I'm telling you right now, this is one of the best things that could ever happen to you if you're financially literate, because now you're going to be able to come out of this buying assets that you never, ever could imagine owning. And things are only going to get cheaper for you, because the government's going to try to fight it, and they're actually going to create more and more problems. They're going to create more and more problems. They're going to lose big. I mean, ladies and gentlemen, we're going to, forget 1,500. Imagine S&P 1,000. It could be a reality, folks. it could really be a reality. Now I'm sticking to my 1500 S&P call here for the year because I don't see how we get out of this. And the vaccine and some work that's being done right now, it's very promising. I know there's a drug that came out like almost 40 years ago that's being used in Africa for malaria that's been showing some really good endpoints. So kudos for that. But at the end of the day, the American consumer has been hurt. All right, they have been hurt. And coming out of this, folks, Americans love to spend money, but they've been taught a lesson here. They've been taught a serious lesson here. And I think you're going to see an American public that is going to love to save money out of this. Right? They're going to be like, hey, I don't know if I want to spend to my last like, they used to do. Right? Because Americans love living check to check. I mean, Americans, when an American gets paid, he will spend until basically his last dollar. That's how these people, that's how Americans spend. You don't do that in other parts of the world, but that's why other parts of the world don't get huge depressions, recessions like we do. I mean, but hey, that's a topic for another show. All I have to say right now is, folks, we sold off aggressively. We should bounce. Whatever bounce comes out of that should be sold. Okay? That should be sold. Forget about 2,700. Forget about 3,000. Forget for the next 30 days at least. Understand that we're going to be seeing some critical lows again. All right? That's just what it is. We could trend in the range between 2,300 and 26. I think if we break 2,350, oh my God. If we break 2,350, it could get real. I mean, it could be a slaughter. It'll be a slaughter by middle of April. But for right now, I think between 2,650 and 2,385 is, I think, where we kind of hold off right now. So continue to watch that on the S&P 500. I'm going to put out a video on stocks to watch for the time being. But until next time, folks, take care. Trade well.
We're trying to get paid.
Making money, make it dollar.
We're trying to get paid.
Making money,
Save and invest, stacking up checks, let's go.